Hello everybody, this is Toni Turner and welcome to the Market Now as of Friday, July 26th at 2 p.m. Eastern. Well, robust earnings from Google owner Alphabet and Twitter took the S&P 500 and the NASDAQ indexes to record levels again today, with data showing the domestic economy slowed lesser than expected in the second quarter, providing support. The Commerce Department said the GDP increased at a 2.1 annualized rate in the second quarter, higher than a 1.8% rate that economists polled by Reuters forecast. So that's good news. So let's go on to three charts that could give us some insight into the week to come. As we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This ETF tracks our S&P 500 index, which of course is our major benchmark for our U.S. stock market. So looking at that right now, when I captured this chart today, the SPY was trading at $301.78. It made a new intraday high so far today at $301.86. So we're up at yet another high, at new highs, I should say. So again, it's trading at $301.78 right now. And that took out the prior high on a couple of days ago on July 24th at $301.44. So the RSI here, as we look at this, well, let's look at the 20-day moving average first. Ever since the market dipped in May on tariff trade news and that particular subject, the market has rebounded and the SPY has walked right up the red line, the 20-day moving average. It's getting closer and closer to it, and we're hoping, of course, that the 20-day continues to act as support. Now the 20-day moving average is coming in here now at $298.51. We also have support down here at 296 right here. That's price support just below the 20-day moving average as well. A little down a little lower at 294, 295, and down at 291. And of course, we've got the 50-day moving average, the green line, coming in here at 291.28. So lots of potential support here should the SPY need it. The RSI here, as I was about to say earlier, is still bumping up against its 70 line on its scale. As we know, if the RSI moves above the 70 line, that will say that the SPY is overbought, and that sometimes leads to a leg down or a push down. As you can see right here in April, the RSI did jump up above that 70 line, and soon after we saw a downturn in the market. So it's nothing that reacts within a day or two. It's just something that you want to keep an eye on if that line gets over it. But so far, it's below it now. The RSI is at 63. The MACD is trading nicely above its 50 line, or its zero line, I should say, just trading totally sideways here, as it would be with the SPY moving down and then up again in recent weeks. So we'll keep an eye on all that. But it looks good. We do have about 1 to 2 more weeks of earnings season left. Plus, and it's a big plus, we have the Fed meeting and the interest rate, and with the possible cut this coming Wednesday. So that will absolutely, definitely move the market one way or the other. Now, one would think that if the Fed lowers interest rates, logically the market would go higher, of course. But if that move is already figured into the prices right now, one never knows, so we'll have to fasten our seatbelt and wait to find out. Our next chart today is a chart of the Invesco QQQ, symbol QQQ. As you know, the Qs represent the NASDAQ 100, a very important index in the market and certainly home to some of our biggest momentum stocks. Now, as you all know, or probably know, Alphabet and Facebook came out with good earnings, so that helped take the Qs higher today. And actually, the Qs came into, it's trading right now at $195.33. It posted a new all-time intraday high today at $195.42. And that's above the July 24th high a couple of days ago at $195.15. So we're doing well here too, and the QQQ is walking up its 20-day moving average. That's all good and making new highs. So we do have plenty of price support here, coming in at 191, a little more at down at 191, 192, where the 20-day moving average is coming in. More down here at about 188, 189, and certainly down here where we have the 50-day moving average and price support coming in at 185, 186. So like the SPY, plenty of potential price support if we need it. Like the SPY as well, the RSI is just kind of bumping its head against this 70 line, which means price is overbought. If it rises above that, it hasn't done that. So RSI here is at 64 right now, just again bumping up against that oversold line, but not over it. Again, the big momentum stocks are directly affected, most of them dramatically, by interest rates. In fact, most of the world is affected by interest rates. So if there's any change this coming Wednesday, it will be announced around 2 p.m. after the Fed meeting is complete, and that should move this QQQ one way or the other, and we will of course have to wait and see what happens. And we do have more earnings again coming out in the next couple of weeks, so it ought to get real interesting about the middle of the week in the coming week. Now let's look at a chart if we want to get a bit more conservative, and that certainly feels good to me right now. I'm looking at a chart, a daily chart here of the Consumer Staples Select Sector Spider Fund. The XLP is the symbol. It has 33 holdings. Top holdings here, top components are Procter & Gamble, Coca-Cola, PepsiCo, Walmart, which has done fantastic in the last couple of months, Philip Morris, and Costco, which has also done very well. Now, you can see on this daily chart that Staples made a low in December, and of course almost every index made lows in December. It made lows at about 38. Then it finally, in January, it crawled up to once again ascend up to its 20-day moving average. And except for a few dips here, one in February and the one in May, most stocks, most indexes made a dip in May, again on the trade talks, the tariffs. But basically, the XLP has walked nicely up its 20-day moving average. Many times, consumers like to get into Staples because they pay high dividends. So if the Fed lowers interest rates, that may happen. It has a good, healthy chart right now, certainly walking up its 50-day moving average. And it came in today, it's trading right now at $60.27, just atop its 20-day moving average, and again above its 50-day moving average. If the XLP, this is a nice setup here, down and then a move up from a small pullback here. If the XLP can continue to move higher in the coming week, I may add shares of it in my portfolio. Now, the all-time high here was posted last week at $60.56. And again, today the XLP is trading now at $60.27. So if it continues higher on Monday, Tuesday, I will add maybe a small portion to my portfolio. If it breaks this all-time high up here of 60.56, you can call it 60.60 if you want, I may add additional shares at that time. Now, my initial stop, as usual, is going to be a close below the 50-day moving average, which is coming in now at $58.60. And if the XLP continues to climb in the coming days and weeks, I will turn that stop into a tighter trailing stop. So you may want to keep an eye on consumer staples and the XLP. And now on to the coming week's economic reports. But first, I want to take just a moment to tell you about a summer sale we're having right now on one of my online training products. Trade the Trend to Profits, a fantastic training program. It's a 2-hour webinar, and in this I will show you how to take 20%, 30%, 50% or more out of trend trades. Trend trading is the easiest and most straightforward way to buy stocks and ETFs at a low price and then sell them for a substantial profit. And this works for traders and investors. I really think it's kind of the best way to do things. My strategy for these trades is extremely simple and easy to apply, and the profits can be fantastic. So please check Trade the Trend to Profits out now, because we're offering it for the next few days only. It's already a low price training. We're offering it for the next few days only at a summer discount of 20%. And it's not going to go on sale again for quite some time. If you click on the link, you can't click on the link below, but click on the button below. Just do that and read all about it and see if it's something you really don't want to miss out on. So check it out by clicking on the orange button below. I think you'll be glad you did. And now on to this week's economic reports. Nothing much on Monday. Tuesday we have the PCE price index, the S&P Case-Shiller Home Price Index, consumer confidence, and pending home sales. On Wednesday, we have the ADP employment change, Chicago PMI, that's manufacturing index, crude inventories, and the FOMC rate decision, again on Wednesday around 2 p.m., very important. Thursday, we have the monthly ISM, Institute of Supply Management, manufacturing index, also important. We have our usual jobless claims and natural gas inventories. On Friday, we will have our monthly jobs numbers and the University of Michigan Consumer Sentiment Report. So, and we will have many, many more earnings announcements coming out. So it ought to be a very busy week. And please remember, this is your chance to learn how to make sweet trend trades with clarity and confidence and earn more trading profits from now on. It's one of my favorite ways to trade. So please don't miss out on this summer sale for Trade the Trend to Profits. It ends soon. For more info, just click on the orange button below. Until next week, I'm Toni Turner. Keep green on your screen, and I'll see you next week. Bye for now.